Good morning, good afternoon, good evening, happy Sunday, everybody. It's Sunday, right? Yes, it's Sunday. It's not Sunday when I'm making this video. That's why I was asking that question. But today, when you are watching it, it is Sunday. Here's the deal with this video. I was very much inspired by a tweet from somebody I follow named Nebraskan Gooner. You might hear me talking about him. What I really like about him is he is able to be as unbiased as possible, to a point where it's something that I strive for, to not be influenced by anyone else, by other opinions, but purely by the charts. And he pointed out this chart. This chart goes back to 1993. You might have seen a short form video with me talking about this. These are quarterly candles. And what he said in his tweet is that this might be the most bullish candle on this chart. And then he says, wow, okay. So what is this candle right here? This is a candle with a very long wick. Let's just be as simple as possible. Look at that wick. Look at the size of that wick. Do you see a similar candle with a very long wick to the downside at least? No, we don't. And then what else can we see from this candle? We can see a bullish engulfing, taking out not only the previous candle's body, but also the previous candle's wick. And within the last couple of trading days, this is the S&P 500, by the way, within the last couple of trading days of the quarter, this bullish engulfing candle has taken out the body and the wick. And given the size of that wick, the buying pressure from that wick, that's very bullish. That's something that I fully admit I was not expecting. But here we are in June, soon to be July of 2025. And this is reality right now. This is a very bullish quarterly candle, which means likely that we have more bullishness to come. When you see that kind of a buying pressure on a wick, yes, we most likely have more bullishness to come. And amazing, guys. This is incredible. This is not at all, I admit it, what I expected to happen. Here's what I expected to happen. I expected something similar to 2008. In 2000, where we would form a bottom, an aggressive move down, a 26% move down in the S&P 500, get back up to the 200-day moving average, and that would be resistance. And then we just keep on going down, putting in a series of lower highs and lower lows. And instead, we broke through the 200-day moving average. We had a perfect textbook back test of that 200-day moving average. And then, what was this? Just kind of like, are we really going to do this, guys? That was my read on it. Like, really? You sure the bond market looks like it's ready to implode? You sure you want to have an irrational pump and move higher? But here we are. And this last week, especially after the peak of fear with the Iran-Israel conflict over the weekend, this last week has put any doubts to rest. And here we are. Congratulations. New all-time high in the S&P 500. Make it make sense. And that's what happens in markets a lot of the time. It doesn't make sense. But this is where we are right now. This move, whatever move is coming in the S&P 500, the NASDAQ, in Bitcoin, and dare I say potentially with altcoins, please, it doesn't make sense. It just doesn't. And so where do we go from here? Honestly, I mean, nobody knows for sure. Let's be clear about that. Nobody knows, but I would expect significant gains from here in the S&P 500 and the NASDAQ. The number that sticks out to me is about 40%. I shared a chart in a previous video talking about potentially a 40% gain in the NASDAQ at least, and S&P 500 would be a little bit less than that. It may be that we go much higher than 40%, honestly. But what's the comparison that's in my mind right now? I would say this V-shaped recovery, you could either compare it to 2018 or 1998. Now, I have 1998 pulled up in a chart on the next window. Let's see if we could pull up 2018 real quick. Here's the V-shaped recovery of 2018. And you can see from there to the peak, where did we go? We went, let's lay this out here. what was the percentage return from the bottom to the peak? It was 119%. Oh my goodness. I'm sorry, I didn't expect it to be that much. 119% in that V-shaped recovery in 2018 from the bottom to the peak. Let's see what 119% would do for us now. All right, let's do it again. 119%. Sorry, I was really surprised by that. 119% goes even higher than what I have laid out here. It goes to don't tell me it's a 4.236. It's almost a 4. It's a little bit higher than a 4.236. All right, 119% would be a $10,500 S&P 500. I'm not even going to entertain that idea. That just seems so not believable. But okay, do we have something like that in store? Well, let's see what happened in the other comparison that I would say would be the S&P 500 in 1998 and the NASDAQ. I want to look at both of those charts here. So 1998, I already have it laid out. And the reason why I've been thinking a lot about 1998, V-shaped recovery, final exciting move, and then it was over, and then the S&P 500 dropped significantly. And so what's that move, What do we have here? We have from peak to bottom a 50% drop. NASDAQ is in both directions very dramatic, FYI. So a 68% rise followed by a 50% drop in the S&P 500. I think something similar is going to happen with the S&P 500. Now, looking at the NASDAQ hit a new all-time high a couple of days ago, or a few days ago from when you're watching this. And same deal, V-shaped recovery, looks exciting. And so now what do we make of this? Well, all right, let's look at the NASDAQ in 1998. From that 1998 to late, actually this went into early 2000s, but there's a modest 278% gain. A modest 278% gain in the NASDAQ. No, I very much do not think that something like that is in the cards. But the NASDAQ, this just goes to show how much more significantly the NASDAQ could outperform the S&P 500 moving forward. And my goodness, but from there, we saw the NASDAQ drop quite a significant amount. It was a 72%, 73%? I might have been even more than that, actually. Oh, yeah, it went a little bit lower in 2002. So I was thinking 80%, 78.86%. I think both things are coming. Now, again, not to the extremes of what we saw in the late 90s during the dot-com boom and bust, but something similar to the extent of just an increase followed by a sharp decrease, a decrease that would go lower than this bottom here, 14,000. I would expect whatever the NASDAQ gets up to, if it's $25,000, if it's $30,000, the NASDAQ at 30,000, my goodness, I would expect the NASDAQ after that to get below $14,789 and change. I truly do believe that. So now what? Now my mindset, now I know this is a crypto channel, but I expect crypto, the reason why I'm talking about this is an invalidation of the thesis that I've had. All right. And I want to be clear. I want you to hear that from me. I had a thesis that I thought the end of 2025 was going to be bearish for Bitcoin. And a lot of people have asked me for an invalidation of that. Well, what's an invalidation? I actually went to the stock market and I thought to myself, if we have a V-shaped recovery in the stock market, then my thesis is invalid and we're going to have an irrational pump to end the market. And it looks like, we have a V-shaped recovery, no doubt. That is a beautiful V right there. Let me kiss it, But we have, what would it look like? A pump to end it. And then, guys, I'm just telling you, I've presented lots of signs in the system that there is weakening, that there's weakness forming. But that just takes time. It takes time to play itself out. And we have to take into consideration the fact that the dollar is also a bubble. So we have the everything bubble. I'm sure some of you are probably tired of hearing those words. The everything bubble. That's what we're in the middle of right now. And so what happens? How does a bubble like that burst? I mean, I've talked about gold, and we're seeing that. We've already seen the beginnings of the bubble burst, because even though the NASDAQ and the S&P 500 are at new all-time highs, they're nowhere near those levels for gold when you price those things in gold, which is what you should do. So I have some of those charts here. Dow Jones priced in gold, not even close to an all-time high. We've been in a bear market since 2018 with the Dow Jones priced in gold. You have the NASDAQ priced in gold. We've been in a bear market since 2021, and this is just a dead cat bounce. We have the S&P 500 priced in gold, same deal, bear market since 2021, and this is just a dead cat bounce. But priced in dollars, which are pretty much worthless, yeah, definitely. We're looking good, but that's a little bit of a facade. So this idea that the S&P 500 or NASDAQ could rally 30 to 40% in their dollar valuations, it makes sense to me. Maybe even higher than that. And it makes a lot of sense for Bitcoin to follow suit. So what about Bitcoin? What about altcoins? We compare, in my opinion, I think it makes sense to compare the S&P 500, the NASDAQ to Bitcoin. And you want to compare the S&P 500, sure, but NASDAQ being tech stocks, it makes more sense to compare the NASDAQ to Bitcoin. And must I remind you, the Bitcoin already hit a new all-time high, so it's kind of leading the charge in comparison to the NASDAQ. But what do you compare altcoins to? You don't compare it to the NASDAQ or the S&P, you compare it to the Russell 2000. And the Russell 2000 has been consistently lagging behind since 2021. But, it's looking good. I mean, this is looking like it's going to form a V-shaped recovery. And my mindset has consistently been, now this is the IWM Russell 2000 ETF. My mindset has consistently been with the Russell 2000 to, once it breaks through a 786 retrace, this is from its 2021 peak to its bear market bottom. Once it breaks through that 786 retrace, that's usually when we see altcoins do very well. Or I shouldn't say usually, because there's only one example of that, and that is literally election night, the day after election night in 2024. The Russell 2000 broke through the 786, and we saw altcoins thrive for a brief period of time until around the time, the Russell 2000 lost the 786 as support. And so same deal, Russell 2000 breaks through 786. I think altcoins, that's a sign of risk on activity. That's a sign of breadth in the market. I think altcoins will start showing a decent amount of strength, and we'll see something more hopeful than what we're seeing right now. So whatever the case, it's exciting times, guys. I would say, you guys, for those of you who've been watching my channel, you know that I've been very skeptical of this market. I've been very cautious, and I would say that this is a market you should be cautious in. But I'm just following the lead of the market, and what I see in terms of what the market is giving us is a 1998 going into 1999 scenario. But be careful, because remember what happened after 1999. So anyway, that is all I have for today, ladies and gentlemen. I hope you have a wonderful day, a wonderful rest of your weekend, and I will most certainly be seeing you in another video. Peace.